Welcome to the University Research Center podcast for May 2026. I'm Corey Miller, State Economist from Mississippi and Director of the University Research Center. This month's podcast covers the latest forecast for the U.S. and Mississippi economies and includes updated projections for inflation. Let's get started. The U.S. economy has held up better than expected, supported by fiscal stimulus in the form of the One Big Beautiful Bill Act from 2025 and continued investments in artificial intelligence. But inflation due to higher tariffs and most recently higher oil prices due to the conflict in Iran are slowing momentum. The main question is, at what point will that resilience give way to meaningfully slower growth? Nationally, growth cooled in 2025 to a 2.1% increase in real gross domestic product. Growth cooled in Mississippi in 2025 as well, as the state's real GDP expanded 1.6%, about half the rate of the previous year. Both economies are expected to continue expanding in 2026, but at a more moderate pace. Employment growth tells a similar story. While the recovery after 2020 was strong, in 2025, employment in the U.S. and Mississippi clearly decelerated. Mississippi continued to lag the national pace, and little to flat growth is expected in 2026. We continue to see uneven employment growth across sectors since February 2020. As of March, the state has added almost 29,000 jobs, but a smaller number than in previous months. Healthcare and trade, transportation, and utilities are responsible for almost all of the gains when the changes are added across sectors. Employment in manufacturing and government both remain well below their February 2020 levels. Notably, the accommodation and food services sector, which was arguably the sector hit hardest by the pandemic, has yet to completely recover all of the jobs lost in 2020. Mississippi ranks in the middle among all states in terms of payroll jobs added since February 2020. As of March, the state ranked 26th. As of March, residence employment data show unemployment in the state is down by about 1/3 since February 2020, while employment is up 3.3%. The total labor force is up 1.2% over this period. However, each of these numbers is down from earlier in the year. Mississippi ranks slightly higher in residence employment growth than in establishment employment growth. As of March, the 3.3% increase since February 2020 ranks 24th among all states. Job openings in the U.S. remain fairly steady as of March at about 6.9 million, essentially where they've been for the past 12 months. The number of hires in the U.S. ticked up to nearly 5.6 million in March, which marked their highest level since February 2024. Similarly, U.S. unemployment ticked down to 7.2 million in March, the lowest level since June 2025. Altogether, the recent data indicate the U.S. labor market appears to be stabilizing after several months of volatility. In addition, job openings and hires from Mississippi are not included in this month's outlook, as these data have not been updated since last December. The U.S. labor force participation rate declined in April to 61.8%, the fifth consecutive monthly decrease and the lowest rate since October 2021. Similarly, the labor force participation rate in Mississippi fell to 55.5% in March, the lowest rate for the state since September 2024. The decrease in the labor force participation rate in Mississippi is likely associated with a decrease in the real wage, which will be discussed later. Seasonally adjusted initial unemployment claims in Mississippi were about 3,900 in March, the lowest monthly number in 4 years. Initial claims remain well below the monthly average from 2019, an indication widespread layoffs in the state have not occurred. The number of seasonally adjusted continued unemployment claims in Mississippi rose to 31,300 in March, which was the second consecutive monthly increase. Nevertheless, continued claims also remain well below the 2019 monthly average. The long-term trend shows a gradual rise in continued claims, a signal that job seekers in the state are taking longer to find jobs than in previous years. Nationally, unemployment claims continue to remain relatively low. Both initial and continuing claims have trended down since late 2025. The University of Michigan Index of Consumer Sentiment, which goes back to the 1950s, hit an all-time low of 49.8 in April. The index has been particularly sensitive to consumers' financial situation, and the recent uptick in inflation has pushed the value to a new low. Higher price levels over the past 5 years have restrained the index, which has lost more than half of its pre-pandemic value. Another measure of consumer attitudes, the Conference Board's Consumer Confidence Index, continues a downward long-term trend. However, this index is not as sensitive to consumers' finances, and March actually marked the third consecutive monthly increase. Nevertheless, the index also remains well below its pre-pandemic level. Recent forecasts of 30-year mortgage rates show an expected increase in the second quarter of 2026 before resuming a gradual decline over the next 2 years. Rates are not expected to fall below 6% until the second quarter of 2027. Interestingly, Mississippi housing activity has picked up recently based on the real value of building permits in the state. The value reached its highest level in more than 3 years in January. While the value decreased in March for the second consecutive month, it remained at its highest level since mid-2022. The value of the Mississippi Leading Index of Economic Indicators fell for the third consecutive month in March. The value of the index has remained in roughly the same range for the past year. In April, the year-over-year change in the Consumer Price Index was 3.8%, the highest such rate since May 2023. The increases in the 12-month change in March and April were driven primarily by higher gasoline prices as a result of the conflict in Iran. The 12-month change in the Core Consumer Price Index rose for the second month in a row in April to 2.8%. The core CPI excludes the more volatile values of food and energy. However, the recent increases indicate higher gasoline prices are beginning to bleed over into the core CPI as well. Looking more closely at specific categories of the CPI, as of April, the 12-month change in the price of electricity was 6.1%, and the 12-month change in the price of gasoline was more than 28%. The year-over changes in the price of food and shelter both exceeded 3% in April. The year-over-year change in the real wage in Mississippi was negative for the fourth consecutive month in March. On a monthly basis, the most recent peak in the real wage in Mississippi was in February 2025, as the value has been lower in every month since. The firm S&P Global Market Intelligence currently projects no cuts in the federal funds rate target will occur in 2026, and that the next rate reduction will not occur until June 2027. In its latest forecast, S&P Global continues to assume the U.S. imposes Section 232 tariffs of 10 to 25% on imports of copper, lumber, and pharmaceuticals, as well as 50% tariffs on aluminum and steel. Also assumed in the forecast are universal or so-called reciprocal tariffs ranging from 10 to 40%. Section 122 and Section 301 tariffs replaced emergency tariffs following the Supreme Court ruling in February. These amount to a 15% surcharge on most imports. Notably, the Section 122 tariffs will require congressional approval to continue beyond 150 days. S&P Global estimates the current tariff regime converges to an effective tariff rate of roughly 10%. The firm estimates if Section 122 tariffs do expire, the effective tariff rate will fall to 8 to 9%. Other sources, including the Yale Budget Lab and the Tax Foundation, estimate that tariffs will reduce U.S. real gross domestic product growth by 1/10 to 5/10 of a percentage point in 2026. In its latest forecast, S&P Global Market Intelligence estimates U.S. real GDP will expand 2% in 2026 and 1.8% in 2027. These forecasts are down 0.1 of a percentage point and 0.2 of a percentage point, respectively, from the previous month. U.S. real GDP is expected to expand 2.3% in 2028, a forecast that is 0.2 of a percentage point higher compared to last month. The University Research Center estimates real GDP for Mississippi will increase 1.3% in 2026. This forecast is 0.3 of a percentage point lower than in April. The forecast for Mississippi real GDP growth in both 2027 and 2028 are increases of 1.2%, unchanged from the forecast of the previous month. U.S. payroll employment is projected to increase 0.2% in 2026, according to the latest forecast by S&P Global. This forecast represents an increase of 0.2 of a percentage point from the previous month. The firm estimates U.S. employment will fall 0.1% in 2027, a decrease of 0.2 of a percentage point from the April forecast. In 2028, S&P Global projects U.S. employment will rise 0.3%, a forecast that is down 0.2 of a percentage point from the previous month. Payroll employment in Mississippi is projected to remain unchanged in 2026 and 2027 in URC's latest forecast. The 2026 estimate is down 0.2 of a percentage point from the April forecast, while the 2027 estimate is the same. URC forecasts payroll employment in the state will decrease 0.4% in 2028, an estimate that is 0.3 of a percentage point lower than in the previous month. The latest forecast by S&P Global projects consumer price index inflation will reach 4% for all of 2026, a forecast that is higher by 0.6 of a percentage point compared to the previous month. The CPI is projected to increase 2.5% for all of 2027, a forecast that is 0.1 of a percentage point higher than in April. S&P Global estimates the CPI will increase only 1.6% in 2028, a forecast that is down 0.5 of a percentage point from the previous month. In summary, higher inflation is weighing on growth prospects for both the U.S. and Mississippi economies in 2026. Employment growth at both the state and national levels is expected to be essentially flat over the next 2 to 3 years. There is no recession in the current forecast. Most analysts estimate the risk of a U.S. recession beginning sometime in the next 12 months is in the range of 30 to 40%, as uncertainty remains relatively high. Inflation will remain elevated until at least the second quarter of 2027. The rate in 2026 could move even higher depending on geopolitical developments. Thank you for watching. Remember, you can subscribe to our publications and follow us on X or Twitter at Mississippi URC.